Hey guys, welcome back. So today you will be learning about a new chapter which is Companies Act 2013. So till now you've understood about how a contract works in our Indian Contract Act. You learnt about Sale of Goods Act, right? LLP as well as partnership. Now we've come to the last chapter which is Companies Act 2013. In this chapter, what are you going to learn? So you'll obviously learn about why this Companies Act 2013 was introduced, when was it introduced, and what are the core provisions of Companies Act 2013. See, this act is very huge, and at foundation level, you'll be learning only the basic parts of Companies Act. Okay, so in this chapter, you'll be learning about when was the Companies Act enacted, what is the object of the act, and what are the charter documents required for incorporation of a company. And also, you'll understand about how do we incorporate a company, what are the basic features of a company that would be applicable once the company comes into existence, right? How to get a certificate of incorporation, what are the e-forms to be filed, and also how to draft memorandum of association and what are the contents of articles of association. And also, you'll be understanding about share capital, shares, and so on. So only the basic parts you'll be learning in this chapter. Now to begin with, what exactly is a company? Now I'll come to Companies Act provisions little later. It's very important to understand what is a company. That's the very first basic question that you need to understand. So as you can see, a company is basically one form of business organization, right? Now in Partnership Act, in LLP, you all know that for a businessman, there are various options to start with. For example, let's put yourselves in the shoes of a business person, okay? Now you start a business. So how does a business start? First, you come up with a business idea. Then you do a feasibility study, right? Whether my idea is good enough or not. Then one of the most important decisions that a business person should take will be which form of organization to start with. Should they start with sole proprietorship? Should they start partnership? Should they choose LLP or they should choose a company, right? So company is basically is a one form of organization or one business form of organization, right? So just like other forms of organizations are there are unique features applicable to a company as well. Now let's understand the terminology of company. Now this word company is derived from a Latin term, okay? So it was divided into two parts. One is cum, one is panis. Now what does this mean? Cum, as you can understand, coming together. Okay, and panis means bread. So what exactly is cum panis? It is nothing but it was denoting a situation where people used to come together to consume their meals. Okay, that means in the olden days, people used to discuss their business matters whenever there was a gathering. Whenever they used to gather for having lunch or dinner or whenever they used to come together, okay? When they were discussing business matters, that is when this term cum panis was used, coming together and having lunch or having dinner or a meal together in a nutshell, okay? So company is derived from a Latin term which means cum panis, okay? So later on, as in when there was an evolution of business of the commercial world, obviously you could not discuss matters only when you're consuming meals or in a social gathering, right? Now a separate legal entity was created, that is entity as in an establishment which is recognized in the eyes of law was created, and that is when a company form of business organization was originated, okay? So company in short is basically one form of organization which originally meant people coming together to have meals, and now there is a different understanding or a different meaning given to company, okay? So company, we have different definitions given. We have statutory definition, we have definitions given by different authors, okay? So in this chapter, you will understand right from the basic of what exactly is a company. What do you mean by company? Where is Companies Act applicable? And so on. Okay. So to start with the definition. Now I told you there is a statutory definition. What does statutory definition mean? It means the definition given under Companies Act 2013. Okay. So before we go to the statutory definition, it's very important to understand a meaning from our author's perspective, because the definition given in statute says a company incorporated under this law or under previous law. For a layman or for a person to understand what a company is, that definition would not be sufficient. So we'll understand the meaning of a company with this definition given by Justice Lindley. Okay, so he says it's an association of many persons. So first of all, understand when you were learning about different forms of organization, out of sole proprietorship, HUF, partnership, LLP, company, except a sole proprietorship, everything else is an association, right? So two or more people coming together, they are pooling their resources for business and to generate profits or utilize the profits of that business, right? Similarly, company is also an association. Now, this association is voluntary in nature. That means, you all know in Indian Contract Act, before entering into any contract, there should be consent and such consent should be free, right? Similarly, a company is formed, which is an association of people who come into the business voluntarily. Okay, so company first feature will be a voluntary association of many persons. Now, in the previous act, that is Companies Act 1956, there was no concept of one person company. Okay, only in Companies Act 2013, one person company's concept was introduced. So, earlier you could either have a private company or a public company on the basis of membership. Now, in this entire chapter, you will also learn about different types of companies. Till now, understand, in the old act, there was only private company and public company based on membership. But now in Companies Act 2013, there is a concept of one person company, which means there is only one single member who owns the entire company. Okay. Other than that, all other types of companies is an association of many persons coming together who contribute money or money's worth. That is, all of you know, for starting any business, capital is required. So, as I was saying, the steps of forming a business, you come up with a business idea, right? Immediately, the next question you will address is, how much money do I have? Do I have enough money to start my business? See, for different business, different amount of monies would be required. That only a business person will decide how much money is required for my type of business and at which scale should I start, correct? So, money is required to start a business. So, it is required for starting a company. Now, people who are coming together, let's say you and I are starting a private limited company. Do we own that company? Yes, we own that company by contributing money to the company. That means whenever we are investing our money into the company, we get shares allotted. Okay, the moment the shares are allotted, we become the shareholders. See, there are thin line of differences between members, shareholders, which you will be understanding in the upcoming lectures. So, as of now, understand, these people who are coming together, they are contributing some money or money's worth to the company so that the company starts its operation. Okay. What is the reason of putting this money? It is for some trade or some business, right? So, I think most of you would be investing in some shares or stocks of other companies. What is your intention? Your intention is to generate more money from that investment, right? You are expecting a capital appreciation, you are expecting a return on your investment, a much higher return compared to other avenues of your investments, right? So, you are investing seeing the objects of the company, seeing the business of the company, what exactly the company is into. So, whether when a company is getting formed, people are contributing the resources in that company depending on what business is it into. Whether there are future prospects in the company, whether there is a probability of high growth or low growth or mid growth, all these are the basic analysis that an investor would do. Okay. So, any association of many persons who contribute money or money's worth to a common stock, I'll come to common stock, in some trade or business. Now, what does this term common stock mean? Common stock means, let's say there are 50 people who are coming together to start a company. Now, one person might contribute 10,000, the other person might contribute 20,000. Similarly, all the 50 people would be contributing X amount of money depending on how much they are willing to invest and how much they have the resources to invest, right? Now, all this contribution by individual persons who are forming the company, that becomes a common stock. Common stock is basically used in a layman's term. In Companies Act 2013 as well as in the old Companies Act, it is referred to as share capital. Okay. So what is common stock? It is nothing but a pool which is created by all the persons who have contributed money to the company. Now, what is the intention? As I said, you all want to make profits out of a business. See, whenever you complete your graduation, your profession, you'll have two choices, either to get employed or you want to start your own business. If you're employed, there are some pros and cons. If you're in business, there are certain pros and cons. So, weighing both the pros and cons, you will be deciding whether to get into employment or into practice. Correct? Now, let's assume you're getting into business. What is that driving factor for you to get into business? Probably it could be you would want to be your own boss, or you want to make more money when compared to what you would get when you're in employment. There are different reasons. Okay. So the primary motive of any business person to start a business will be to make more profits. And of course, whenever there is any pros, there was always a disadvantage, right? So there could be losses. There might be, there might not be, but usually when you start a business, initially when you're trying to put your product or service in the market, you will not make profits immediately, right? Initially you will have certain losses. Later on you try to come to the break-even point and then you start generating profits. So whenever you have the advantage of making profit, you should also be willing to take the loss in that business, right? So these persons who are coming together are employing their investments in the company, and that investment, individual contributions put together will become common stock, and the intention of their investment is to generate profit, and also they are agreeing to bear the losses arising from that business. Now, the common stock so contributed is denoted in money and becomes the capital of the company. As I said, common stock is nothing but in the layman terms. In Companies Act, we refer it as to the capital of the company. So going forward, you will understand what are the different classifications of capital. We have authorized capital, we have issued capital, paid up capital, and so on. So in this entire chapter, you will be understanding the basics of formation of a company. Moving forward, the persons who contributed in it form or to whom it belongs are members. This is a very, very important term in Companies Act. Okay, one of the important terms. So coming to members, this is a very, very important term in Companies Act, or rather you can say one of the important terms. Now, who is a member? Member is a person who is contributing money to the company or contributing capital to the company. So in simple terms, an investor, right? So for a company, when you say it's an association of individuals as well as artificial persons, now whoever wants to become a owner of that company should subscribe to the shares of the company. So that person is called as a member. Now members can be either artificial persons or it could be natural persons. What does that mean? Now when company is formed by individuals, human beings, that is allowed. Natural persons can start a company. Similarly, artificial person, that is, one company can create another company. One company can subscribe to the shares of another company, and by subscribing to the shares, an artificial person can also become a member of another company. Okay, so a company can be formed only by natural persons or only by artificial person, or a combination of both natural persons as well as artificial persons. Okay. So, who are members? Members are basically the owners of the company. The proportion of capital to which each member is entitled is called as a share. Now, what is a share? Share is basically a portion, right? Now, share according to Companies Act means a share is a share in the share capital of the company. What does that mean? Now, I have used one term, common stock, or it is called as capital, right? Now, capital is a larger term. That is a common pool of all the investments made by different members. Now, I might have invested just 10,000. You might have invested 20,000. Some other person would have invested 50,000, right? Based on how much we are investing, accordingly, a share in the share capital will be allotted. Okay. Likewise, whenever a company is deciding certain matters in the general meeting, voting will be determined. So, we the members, that is the persons who have contributed capital to the company, will have voting rights. So, the general rule is one share, one vote. Okay, so the decisions taken in the general meeting will be either through ordinary resolutions or special resolution, which is basically voting. So how much vote can I cast? I can cast only up to the amount of share capital or the amount of share I have in the share capital. Okay, so share is allotted by the company to the members in proportion to their contribution to the share capital. The shares are always transferable, although the right to transfer may be restricted. What does this mean? This basically talks about the right of a member. Now, I have invested, let's say, 20,000 rupees in the company, and accordingly, depending on the nominal value of the shares, certain number of shares would be allotted to me. Now, this basically share is an asset. It's a movable property, right? So, in Sale of Goods Act, you've already learnt about the definition of goods, where share is also included as goods, right? So, you can trade in shares just like you buy and sell any good. So, whenever you're selling any share, you are making a profit. Whenever you are buying a share, you are buying with an intention of trading at a higher price, right? That means shares are always tradable. It is always transferable. When you transfer, you get a consideration in return. Now, this definition says shares are always transferable, although the right to transfer them may be restricted. What does this mean? Now, there are types of companies based on membership. We have public company, we have private company, we have one-person company and small company. Okay. Now, public companies' shares can be freely traded. You can transfer n number of times, right? So, you can purchase it today and you can immediately sell it. There is no such restrictions on transferability. So, the very definition of a public company gives the permission for the members to transfer as and when they want. But the shares of a private limited company are not freely transferable. Why? Because the definition of a private limited company restricts the transferability. That means, in the articles of association, there are certain conditions to be complied with. So, let's say I am a member of a private limited company, and if I had to transfer my shares, sell my shares, first I have to notify to the company. Okay. Then there are certain processes which will happen in the board meeting. I have to comply with the conditions specified in the articles, and then only I can transfer my shares. Okay. So, what does this definition say is, shares are always transferable. It is an inherent right of every member, be it public company or be it private company. But only in private limited companies, the shares transferability are restricted. So, this is what the last sentence says. So, let's summarize the entire definition. Company is an association of persons, many persons coming together. They are coming together, they are pooling their resources in terms of monetary resources, okay, because capital is required to operate the company, to start the company, right? And the pool which is created by individuals' contribution will be called as common stock, which in Companies Act is denoted as capital of the company. So, those people who are contributing money to the company becomes members. See, there are two ways of generating funds for the company. One is through equity, one is through debt. So, people who contribute to the equity, they are the owners of the company. People who contribute to the debt part of the company, they become the creditors of the company. Okay. Next, once you contribute money to the company, accordingly, a proportion or a share in the share capital will be given to each member. Last one, the right of member. It's an inherent right of every member to transfer their shares. Okay. If they're willing to, it is at their discretion. There is no compulsion they have to transfer the share if they want to. But a private limited company's members cannot transfer the shares as and when they require without complying the conditions mentioned in the articles. So, this is what a company means. Okay. So, how do we summarize what is a company? Let's say you're walking by a road. Let's say you're walking on a road and there's a layman who comes and tries to understand what is a company. Since all of you are CA students, he wants to understand. So, how do you summarize? Firstly, company is a form of organization, right? Apart from a sole proprietorship, HUF, LLP, partnership, this is one form of organization. So, a company is formed by different people, and people who are forming it or owning it becomes members of the company. Okay, so this is one definition. There are more definitions given by different authors. There are statutory definitions which you will be understanding. I hope this is clear till here. In the next session, we'll be understanding more features of the company as well as definitions. Thank you.